This year Indian markets are down 16% and foreign institutional investors have not pulled out. So if they start pulling out money, what could happen?
Well, I think Amit's point is valid in the sense that if you have, see, if it depends on quantum, I mean, to be frank, one of the things which surprised me is that despite how much India shot itself in the foot in this year in terms of the policy paralysis, the lack of governance, the whole bunch of the lack of economic policy momentum, I am surprised that foreign flows are still flat for the year, frankly, because anyone I talk to, I mean, global macro funds were all underweight India because they were worried about inflation and rising monetary policy. A lot of all the surveys you read, everyone's underweight India, but the flows are flat for the year. So it's kind of surprising. I think, I mean, my own thesis on this is that people have not yet given up on India's long-term story. And I think that's the big potential risk. I mean, I haven't given up also. I think that India will get its act together and will grow at 7 to 8%. And there is still this feeling among investors that this is all the policy issues seeing now are blips in the road. In a long-term 10-year story, this will happen and things will resolve itself. Today, if international investors actually decide that this is not an economy growing at 7, 8%, this is an economy growing at 5 to 6%, then you will see very significant outflows, and then the market will have a significant re-rating down. But I don't think that has happened yet. I don't think that will happen yet.
But Akash, there's one problem with this thesis, that the world did not like India's policy paralysis. Now the lesson is that the world politicians and the world systems are equally bad. Till the last day in August of 2nd or whatever the date was, the US did not tell you whether the debt ceiling is being increased or not.
No, but that's by saying that my neighbor is so dumb that I'm equally dumb. How dumb is that?
The point is, maybe people have accepted that this policy thing is no one guy is better than the other. If you had been better, you would have gotten much more. But if you are in Europe, what is the problem? It's policy paralysis. You say people are on holiday. President Obama is on holiday. That's policy paralysis.
There's so much pent-up reform required in India, which everyone is aware of. Right?
That I agree. I'm not trying to overly justify.
Markets will not go anywhere.
No, I'm not saying no. That's, I think, unfair. I'm saying that if you want to be confident that markets go up, pretty much unless in a reasonable situation, unless the total world collapses, you have got to see some movement in Delhi. That's what I'm saying.
That I agree. But I'm saying the other way around is that maybe the discovery now is that all of them are pretty bad. So let us forget about the policies part and just look at the rest of the natural growth, catching up, emerging markets.
I think it's still important.
I'm saying in a relative sense why the last 2 billion were not withdrawn is because they didn't know where to go, because everybody else was equally in a bad shape.
That's possible. World is running out of options. Sameer, do you expect Indian markets to outperform once the global dust settles down?
Well, I think if it settles, as in not in first a crisis then settles, I think next year, I've said it publicly, I've said it to my investors, I think India will go up 25% in 2012. After that, I don't know. But that is because at the end of the day, if we don't go up between now and 2012, what will be our valuations at the end of 12? Even today, our earnings growth is very high. Even yesterday, I read that indirect taxes have grown 27% even this year fiscal from April to now. And with just the peaking of interest rates and some reforms of this kind which will be done, and I think we have never really done any serious reforms. All we did was let a few guys more come in and make some roads, which they will still be allowed, because if you don't let them make roads, the corruption has to go to zero. If you don't allow them any approvals, that means they are going to zero. I don't think we are saying that all these things where government gets, or bureaucracy or system gets whatever they can get, I don't know, can't go from 100 to 0. It can go from 100 to 90, 80, and the rest will still move on. But basically, the lack of alternatives is a good reason for India. Secondly, I still believe that relative performance is a very good starting point, because ultimately the institutional investor first tries for relative performance. In India's case, the beauty is if only $10 billion out of trillions of dollars want relative performance only, it'll give us absolute performance, because we are so low in the system. So there will be somebody somewhere who will come here saying, okay, India's policy is bad, but the world policy is also no better. And that will then convert to a little bit of... So if you are absolutely convinced all your life that India will have relative performance...
Everyone will listen up to you, Amit. You are the one who will decide whether India goes up or not.
What I worry is, as a portfolio manager, as an Indian, is that we seriously lost our competitive edge, basically. I mean, if you look at, let's say, a simple metric of basket of goods produced in India versus its trading partners, India is really high up there. And, the cost of capital is very high, cost of real estate has gone out of control, and cost of labor is very high. So basically, well, on a short-term basis, you could argue, well, India may outperform on a relative basis and, earnings growth will be there. But markets are not about just looking at one-year earnings. I mean, a typical institutional investor wants to have predictability in an earning stream of between 5 and 7 years. And that's what I think Samir and Akash, both of you look for companies in which you want to invest in. So from a country's perspective, I see that predictability, getting poorer by the day. The risk of external shocks to the system have significantly increased.
That part I totally agree. I've always said that please don't laugh at what is happening in US. US, I believe, I'm not 100% sure, but I believe in 1928 had more car sales than we have today. Okay, so to say that, oh, our car sales are growing 30%, they are growing 0, or they have problem. In terms of us being behind them as a country, we'll be at least 75 to 100 years behind them, and maybe we'll catch it to 60 years behind. But we are talking about the stock market. Stock market earnings in the last 10, 15 years, India has had much higher much higher predictability of earnings and consistency of earnings than I think literally any other market.
I disagree.
Because of the mix.
Okay. I mean,
I just want to make a point. I think if you go back and see, and I think what both are saying same thing, which is that if you went back 2 years ago, coming out of 09 or especially 06 or 07, and someone told me or told you any of us, I think that look, over the next 10 years, will India grow at 8% GDP, which means 15 to 18% corporate profit growth, I would have been very confident 3 years ago saying yes. Today the level of confidence has gone down in my mind, and that's gone down because of all the stuff we're talking about, policy paralysis, global, etc., etc. So my point is that people have not yet given up on the long-term India story, which is why flows are still reasonably good at lower levels. Sovereign wealth fund money keeps coming in. I'm saying, God forbid, if people actually start saying no, I'm wrong. This is not a 10-year 8% GDP trade. India is going to get caught.
But in this time when you are I agree with you that confidence on India growing in corporate earnings, let's say 50 earnings percent has come down, but has the prediction on the other corporates or other markets for the next 10 years also would have gone down.
No, but that is it could have, but the point,
island, I agree.
No, but the point I'm saying is that we are looking at a situation that we had the potential. The point you started off by saying of we had a potential of having a rock solid long-term story. We're still a decent long-term story in an environment where the world is looking for good long-term stories. You had a chance to create your own destiny and really do well. Now we are again being subject to global factors. That's his point. If oil comes down, India does well. If today you had 20 bills being passed, nobody would have cared what the oil price was. India would have done well anyway.
So let's get the macro thoughts going.
Opportunity.
Yeah. So let's get some macro thoughts going, and then we'll wrap up the macro part, and then we'll focus on the micro. Amit, your macro call on India.
I mean, it's pretty mixed. I mean, so as I said, I mean, unless you see good policy action, I mean, India will just be at the mercy of international policy. I wouldn't say that. I mean, at a certain level you buy and a certain level you sell. But as Akash said, I mean, the confidence of holding Indian assets, for 3 to 5 years, has diminished in my opinion. Yeah, you play the market, but you keep an eye on the door.
Okay. Akash, your macro call on India?
I am more on that. I think India will do reasonably well next year, because my thesis is that next year global growth is weak. Liquidity is very easy. I think commodity prices, I think even if Bernanke does QE3 or QE4 or whatever it is, there is a clear understanding that high commodity prices is weakening the consumption in the West as well. So they're going to put in regulatory measures to try to control commodity prices, in my opinion, indirectly, margins and stuff like that. So in this environment of low global growth, easy liquidity, stable commodity prices, I think India will do okay.
So maybe your macro call.
I agree with Mr. Prakash. It's my general macro call.
As a
in life.